Hi everyone, Brian from Bearable Traders. It's the weekend, January 28th, almost 1 month gone here. And of course, this is the weekend video. We'll go over what happened last week very briefly and then take a look ahead, see what we got coming up this week. Lots of earnings on deck here, so let's get down to it. So let's take a look at what happened last week. The week of the 13th was a pretty volatile week, lots of movements up and down. Of course, we had the CPI and PPI data come out Tuesday and Thursday, and both reflected inflation that was higher than what was expected. Of course, that caused a little bit of heartburn in the markets. We also had some Fed officials that came out and made some comments that they thought the inflation fight was not over. Some of them expressed some desire to actually do some 0.5 more 0.5 rate hikes to try really fight inflation. So there's a camp in the markets right now. People are worried that the Fed's going to be end up being too aggressive with rate hikes, and by the time they finish rate hiking, the market and the economy is going to be going into a more serious recession. But on the flip side, you've got the economy, which still seems to be strong, job growth still strong. Many investors and traders are pointing to that, and they're still counting on this going to be a soft landing, or this new phrase that's come out, no landing, which means we just kind of cruise out of this back into inflation comes down and we cruise back into an uptrending economy. So two sort of camps of thought here, and it was a fight all last week between the two camps, and that's kind of reflected in what the indexes did on the week, which was changed very little at the end of the day or end of Friday. You can see the Dow was down a bit, the S&P was down a fraction. The Qs were up like a half a point, and IWM up 1.5%. Of course, the risk-on trade sort of prevailed there just slightly, so you can see who's kind of ahead there in the battle, but not by much. And you can also see this is a really weird sort of dichotomy. We've got consumer discretionaries and consumer defensive sectors were the strongest on the week. So one reflects a improving economy, and one reflects investors' sentiment that the economy is not going to improve, and sort of flight of capital into more defensive stocks. So kind of again, sort of a reflection of how we have two sort of very different views of the market here. Energy, which was the strongest sector last week, was the worst sector by far this week. It's just up and down. Energy, of course, is a reflection of people's thoughts about how the economy is going to go. Of course, when the economy is going well, lots of energy consumption. This time energy took a real hit last week. So maybe the bears won on that one. The 2-year Treasury and the 10-year were both up slightly. They were up quite a bit higher and then pulled back. But again, the bond market kind of saying the inflation fight is not over and rates are going to go higher. And the yields obviously still inverted with the 10-year below the 2-year. Obviously, with the rates going up, the dollar also followed suit, went up higher as well, which is pretty typical. And Bitcoin was a real star this week. It ripped. It was over at 25,000 at one point, I believe. Last I looked, 24,600, but that was up quite a bit from last week, which was, I think it was around 21,600. So Bitcoin had a strong week. So that was kind of interesting as well. And as always, before we get into the charts, let's take a pause here to talk about my book that's available on Amazon, Profiting as an Active Trader: Guide to Trading Tools, Money Management Rules, Strategies, and the Routines of an Active Stock and Options Trader. You've got some options in there for you if you want to check it out. So that's it. Let's get down and look at some charts here. And as always, we start with some of the bond market action, because usually these are the more sophisticated traders. You can see here we've got the 2-year this is a weekly index, and you can kind of see how we're just inching up here. Again, sort of reflecting that the bond market is pricing in more rate hikes, even more maybe after last week. And even the 10-year coming up a little bit there after coming off this base on the weekly. So more interest rates hikes expected by the bond market. And you can see here on the transports, really we're kind of just chopping now. You can see on the week, a bit of a down day on Friday, but you can see here, we had this spike up a couple of weeks ago, and now we're kind of just trading in a range here near a prior level of resistance, kind of around this area, and a little bit of sort of indirection in the market, or lack of direction in the market. And I think you're going to, as we go through these charts, you're basically going to see that. You can see how we are starting to trade in this range here. Again, seems to be support around this level on the daily on the chart. It's the Dow, and resistance up there in the weekly, and you can see that in the weekly index. Really, after when the dust settled at the end of the day here, we didn't really make any headway one way or another. You can see the volume's really starting to drop off. There's no momentum one way or another, and we may end up staying this way for a while, because there is these two trains of thought in the market. As I've already mentioned, this one thought that everything's going to be great, and we're going to cruise right out of this rate hiking cycle, and others that are feeling like no, the Fed's going to go too far. So we'll see how that all settles out. You can see here the cues on the daily, but on a weekly basis, again, really almost no move at the end of the week. Volume kind of average there. Momentum, just above 50. Stochastics starting to roll over a little bit here, which may be an indication that we might be heading down. You can see what happened last time we had a rollover in the stochastics. So we'll see what happens. Again, the SPY, let's take a look at the weekly, because that's really sort of indicative of where we are right now. Again, a couple of, just basically a doji candle. Indecision is basically the bottom line here. And if there was any decision at all, it seemed like the IWM reflected a move of almost 1.5% there, and you can see we are still stalling out at an area of resistance. The VIX popped up. VIX popped up. A little bit more. Let's see if we can take a look at it. No, it's not. Let's see if we can take a look at it on a weekly. Might be more interesting. So you can kind of see here we didn't make it. We were down on the week, but again, we seem to be putting in a bit of a bottom here, and the VIX was up. It did pull back on Friday, but we'll see where it goes. But again, like I said, there's a bit of a push-pull in the market right now. The dollar down on it, and it was up higher on the day and ended up down. Same with the interest rates, though. On a week, we are trending up. We're still going higher. We're coming into some moving averages here, but the dollar is strengthening, and if the interest rates continue to go up like they're expected to, then I expect the dollar will be stronger. You can see here some volume coming in there too, so looking for a stronger dollar. And here's Bitcoin trading at 24,700. You can see this massive move back here on the 15th. And on the week, we seem to be breaking out here, but we are at an area of 25,000, pretty significant area of resistance. And we failed here before, so it'll be interesting. If it breaks out, we could easily go to 30,000 here on Bitcoin. So keep an eye on that. That could be actually an interesting trade with some of the Bitcoin ETFs, or some of the stocks that are related to Bitcoin, like Mara and Coin, those kinds of stocks. Okay, so let's move on to things that I'm watching this week. The one thing I'm really going to be focusing on is this the 10-year Treasury. You can see here, it's I'm just watching it with TNX, but you can see here we came up on Friday. We touched this prior level of resistance, and we rejected it on Friday. But we do have that big PCE number that's coming out on Friday. And as I said, this is one that's watched by the Feds quite often. And if it comes in hot too, just like the CPI and the PPI did last week, you can expect the 10-year to continue to rise here. And that's not going to be necessarily good for equities, or, that when the 10-year rises, of course, the interest rates rise, the Dollar rises as well, most commonly, and you'll see stuff like gold and silver get hit as well. So again, this is, I think, keeping a very close eye on this one, this chart this week. Everything else, I'm not really liking. Everything else is kind of just trading in a range. You can see here this first chart I pulled up, Apple. We're sort of between 155 and 150. We're kind of stuck there. Momentum is coming out of this stock. If you take a look at it, MACD kind of rolling over, Stochastics kind of rolling over, but RSI, of course, rolling over as well. So not looking that great. Deere reported on Friday. You can see here, here's that prior level of significant resistance right up here. We almost got to it and pulled back on Friday, even though Friday was a bit of a down day. So I'm going to be watching this next week, possibility to sell some 440 calls, depending on what it does on Tuesday or Wednesday, for a rejection of that level again. Flex keeps testing this 25 level, can't get through it. Probably going to bail on this. I don't like the way it keeps testing and failing. So, and I'm not really confident in the market right now. Meta, I had some calls last week, sold them up here. Just like I'm going to do maybe with Deere next week. Just sold them up here after this big bounce up. Couldn't push any higher, and of course they expired worthless. I kept the premium. And I'm looking at Meta. There is a possibility it actually could come down here if we do get a sell-off, more significant sell-off. It could come down here and fill that gap. So possible short here if we can lose this moving average. The Qs, again, we are just literally chopping in a range, but if we do lose this level because of concerns about rates going higher down around this 290 level, which is where the 200-day moving averages could be support there. So a good way to play that would be SQQQ, which is a ETF that shorts the Qs. Tesla always interesting. Just when you think it's down, bounces back up, but you've got this 200-day moving above here. I'm was thinking about shorting some calls up here, but just Tesla is just, there's just so much buoyancy in Tesla. It's kind of scary, but it does look like it's sort of settling into a range here like the rest of the market. UNG was looking at it, just does not seem to have a bottom here. It's they're going to be paying you to use it eventually. I think the way the price is going. And Walmart reports next week, as you probably know. So we're right at resistance. I was looking at some calls. These ones up here are really cheap, so there isn't much. You're not getting much out of it if you sell them up here. So we'll see what it does on Monday. But this is pretty much an all-time high for Walmart right along this level. So there should be some significant resistance up around 160 for sure. But as you know, I don't like to play stocks into earnings. Just don't like it. Feels like a crapshoot. And so I'll maybe be watching that and seeing how it reacts after it reports earnings. And that's it for the stocks I'm watching this week. So wrapping things up here, February 21st, let's look ahead. Again, it's a shortened trading week. Kick things off on Tuesday. You can see right now where we are with all the indexes. We're kind of mid-range at a lot of these support and resistance levels as we looked at with the charts. So we do have a lot of economic events coming up this week. We've got some PMI Tuesday morning after the markets open, so be careful around that time of day. In the morning, we've got FOMC minutes being released at 2 p.m. on Wednesday. We've got jobless claims at 8:30 on Thursday. Of course, jobless claims really in focus because a lot of people thinking the key to bringing down inflation is bringing up the unemployment rate. So this will be interesting. These have been on a downtrend, jobless claims, which is not good for the Fed and their inflation fighting view. And of course, we've got PCE, a price index, on Friday. This is an index that's quite often watched by the Fed, one of their favorite gauges of inflation. So we'll be watching for that one on Thursday before the open. And as I mentioned, there's lots of interesting retail stocks and other stocks that are reporting this week, Monday the holiday. But you got Home Depot, Walmart, You got in Tuesday, you've got quite a lineup there. You've got eBay, Etsy. You've got Nvidia, which will be an interesting one. A couple of Chinese stocks there, Block or the old Square. A couple of stocks, meme stocks, Beyond the Meat and Carvana. That's Beyond Meat, not Beyond the Meat. But anyway, this of course heavily shorted. This one, everybody's saying they're going to run out of money this year. So it's going to be an interesting week of earnings. And that brings us to the end. Everybody enjoy your extra day off Monday. And Tuesday morning, of course, we'll be starting live on YouTube, 8 o'clock, Engineering the Markets, and then 8:30 pre-market show, and 9:30, of course, Trading the Market with our members. So hopefully we'll see you on Tuesday morning. Stay safe, have a great weekend, and hopefully we'll see you Tuesday morning. Bye for now.